I'm Ann Drucker here with our video market update for December 2022. Coming into the home stretch, stocks are living up to their historical tendency to rally in the final months of the year. But a key question we're asking ourselves is whether the rally will hold or fade as it's done twice before over the course of this year. The S&P 500 has struggled to find a consistent trend all year long ever since reaching a high right out of the gate on January 4th. Though the broad equity markets have made some impressive attempts at rallying, those attempts have ultimately failed. The current rally started in October, and November provided some positive news that gave a boost to both stocks and bonds, despite the uncertainty about the midterm election results. Consumer and producer price index data for the month of October provided evidence that inflation could be slowing. Also, the minutes from the Federal Reserve's November meeting indicated that the pace of rate hikes could be slowing going forward. And finally, retail earnings reports painted a picture of a strong consumer, helping to alleviate concerns about the economy. The fact that the broad equity markets have been able to build on their strong performance from October into November has been encouraging. As we've mentioned in previous market updates, FSA watches for the S&P 500 to break above certain levels before we begin to wade back into equities, starting with our most aggressive strategies. Given these signals, we did increase equity exposure in the core equity and tactical growth strategies in November. And this table shows you the overall allocation for all of our strategies at the end of November. As you can see, cash levels remain elevated, especially in our most conservative strategies. But if this rebound continues, strategies such as conservative growth and income and growth will also wade back into equities, albeit at a more measured pace. The broad equity market has spent this past year making lower highs and lower lows, illustrated by the red lines on this chart. This is the pattern of a market struggling to find its footing, and we want to see the S&P break out of this pattern to the upside before we feel comfortable getting all the portfolios back to being fully invested. Another pattern we continue to see is how quickly market sentiment changes based on the news of the hour. In the last few days of November, stocks tumbled on concerns that the protests in China could lead to supply chain disruptions. Then they rallied when Fed Chairman Powell remarked that smaller interest rate hikes could come as early as December. This almost daily battle between good and bad news continues to make for a very volatile market environment. I'll close with a reminder that at this time of year, many mutual funds pay out their year-end distributions. When a fund pays its distribution, the price drops, reflecting that payment. As the proceeds are reinvested back into the account, usually the next day, the value of the fund will increase again back to normal. Well, that's it for this video market update. We wish you and your families a very happy holiday season. And until next year, thank you for watching.